Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Alrighty, so our market has just come into the close, and you can see here that we're just bouncing off the 67, I'll call it 67, it's there about 67.10 support level. We've actually done quite a big move today, about 100 points, much higher than what I was really expecting us to do at this point of time, considering we're a couple of days away from the Fed announcement. But we have done this on fairly light volume, okay? So you can see here the market's still on a bit of a downtrend overall, grinding into a descending triangle. At this, today technically it looks a little bit bullish. I'm not really quite sure how long that's going to last. Indicators are getting a little bit oversold, but with some key information coming up in a few days' time and some public holidays around that, it'd be fairly risky to be trading that bullish signal right now. So yeah, that's our market today, guys. I'm not reading too much into this. I don't think this bullish momentum is really going to last unless the Fed does something to excite the market. And at this point of time, that is about as clear as mud. So at this point, guys, for me, it's kind of a bit of a wait. But technically, there's a little bit of short-term bullishness there. But yeah, with the light volumes, I'm not really too convinced, to be honest. S&P 500 had a reasonable night last night. It did open lower. Well, the futures were quite a bit lower at one stage as well, but pretty big turnaround. You can see here the 3900, which is a very key level of the US market, is once again the level that they're trading to. So it's almost like the algos are set to 39. Just keeps like a magnet at the moment. The thing that's changed for me over the last few weeks, so is we're actually using 39 as resistance rather than using it as support. So if we continue below this level, if we can't get back above 39 tonight or in the coming sessions, well, for me, that's a signal the downtrend is going to continue. So yeah, they're defending 39 for the moment. Will that continue or will it fail from here? Well, we'll probably find out, Thursday morning at 4 o'clock. And that's approximately when the Fed's going to announce. Keep in mind, technically the market's a bit oversold. We're coming into this announcement in an oversold condition, whereas coming into the CPI reading, we came into that in an overbought position. And that's a big difference, guys, right? So what I'd probably say here is some of it's cooked in, but how much is really always hard to know. Okay, so just to talk to a little bit about what's happening out there. After CPI reading last week, bond yields continue to climb. So 10 years up near 3.5%. That's the highest I've seen it for many of years. If it creeps a bit higher, then it's a signal to me that markets are pricing in higher and higher interest rates, and therefore will probably either stay sideways or go lower. So for me, I'm really keeping an eye on this space, guys. Okay, the higher those yields go, the more the equity markets are going to have to price through in higher interest rates for a longer period of time. And I really don't feel like they've priced that in enough at this point of time. So that could, if it goes enough, if yields go high enough, markets have got a bit more selling to do, right? So just be wary. This is a high risk environment. There's much more. I think there's still a very high chance of further downward movement. The big one's tomorrow night, guys. Okay. I shouldn't say tomorrow night. That's Wednesday night. It's really Thursday morning, 4 a.m. So 4 a.m., we're going to hear from the Fed. They're either going to lift rates by 75 or 100 points. We don't know which one they're going to go for. 75 is likely. 100 points is on the table after they had a higher than expected CPI reading. Now, basically, the way I see it, guys, is maybe 100 points could actually be flipped as a positive. Who knows? Okay, the quicker they bring inflation down, the better. Well, at least that's what a lot of people are saying. So, look, this one here is a hard one to predict, guys. And to be honest, I'm sitting on the sidelines for this one. I'm not going to be trading this Fed announcement. We've sold off into it, which means to me probably 75 points is priced in. 100 points, I can argue as a positive or a negative thing. It's obviously negative for the economy, but if you look far enough into the future, it's a positive because the quicker they get this inflation under the control, the better. So look, to be honest, guys, I'm not sure how the market's going to react. Now, the biggest problem we've got in the local market at the moment is we're closed Thursday now. Okay, so for us, we don't get to react to this until Friday, and by then you've had 2 US sessions. So for the Aussie trading side of it, I'm definitely decreasing my exposure because the last time this happened over the Queen's birthday weekend, I'm pretty sure back in June, and it's only just coincidence actually that we've got another public holiday for the Queen, for mourning for the Queen this Thursday. But the last time I recall this happening near a key announcement, we came back into our market being 5% lower. And that happened in one morning, okay? Xshare fell 5% in one morning. So Friday has the potential of that type of event happening once again. So if you're trading the Aussie market, I think you've got to be a little bit careful this time around, guys, because you've got 2 US sessions to our one. If they fall 2% in their Thursday morning session, which is Thursday morning our time, I'm saying, and then if they fall again on the Friday night, the Thursday night coming into the Friday morning when we wake back up, then things are going to get interesting. The other thing you got to keep in mind is Friday is a public holiday here in Victoria, which means that volumes are going to be a little bit more lighter on as well, which means things can really move. Friday to me is a risky day to be trading. Okay. So that's what you got to watch out for. Now, look, what the market's going to keep whipping around, okay? It's going to keep whipping around in the next sort of 2 to 3 months, even beyond, depending on whether people believe we're going for a hard landing or a soft landing. And that's what we've got to be constantly weighing up, okay? If soft landing is likely, markets are going to jump. If hard landing is likely, the market's got some more to sell, okay? I think the market's priced in a soft landing at this point of time. This is kind of where my head's at. I still don't think future earnings in the US for US companies are still actually quite good. It's not pricing in the recession. If they adjust that down, I feel there's a lot more selling to come. Okay, so the US market looks cheap on old earnings data, right? You look at PE ratios, it's based on earnings earlier this year. It's not based on earnings dropping because we're going to have a hard landing. You start pricing that in a bit more, I feel the market's got a bit more to fall. So hard landing or soft landing, guys, that's what do you believe is going to happen? Do you think the US is actually going to go into a big recession here? Do you think that the central banks are going to go too far lifting interest rates and cause that hard landing to happen? If you do believe that, well, just be wary because the market's probably going to fall quite a bit more than what it already has. If you think it's likely to be a soft landing, well, hey, I think we've probably seen the worst of the selling, okay? The S&P 500 might go back down to test 36 a few more times. Our market might go down to test 66 or 64 a few more times, but you've probably seen the worst of it. But I don't think we've priced in a hard landing just yet. Okay, so look, that's the way I think you need to be thinking moving forward. Okay, and to me, I don't see the clear light at the end of the tunnel of which one it's going to be. For me, I think both are still on the table. I am starting to lean a little bit more towards negative, okay, a little bit more towards that hard landing. But then when I start looking at some of the commodity prices out there, the commodity futures, okay, which are very forward-looking from an inflation point of view, crude's back down below 90. Gas prices in Europe are coming back off a bit. Copper, metals have all come back off quite a bit recently. So for me, that is going to help the situation over the next sort of 6 months, but it's going to take a while to play out. So there's that side of it. And then I really think about how much they're lifting interest rates, and they've gone from near zero. And by the end of this year, the US is expected to be at 4%. What does that mean for businesses? What does that mean for the everyday consumer that's going to have to cut back their spending to pay interest payments on their loans? And for me, all of what's happened in the last 6 months, you got to pay it forward, okay? So yes, commodity prices have fallen, but also consumers haven't really felt the pain of these interest rates yet. Once they get through their savings reserves and they start looking at the situation and go, oh, wow, I really need to pull back here. I really need to start, be careful, very careful on what I'm spending. That's going to take months to play out, guys, right? Most people haven't come to that realization yet of what's to come. So I could argue this both ways, and I feel this is why the market's probably going to whip around sideways for a little while in a very volatile manner, whilst we're working out, okay, well, now let's see this bit of economic data. How positive or negative is it getting? If economic data is getting very negative, watch this market fall off quite a bit more. All right. Now, last but not least, before I finish this video off, so look, we've got the Fed announcement this week. After the Fed announcement, things for me go a little bit quiet. We're not going to hear about CPI from the US or the Fed again for at least another 3 weeks. In that time, we're going to kick off the US reporting season. So my feel is we're going to rise up into that reporting season, guys. So once we're over the volatility here over the next 3, 4, 5 days with the Fed, we're going to start focusing on what's next. And what's next is that reporting season. So I think we'll lift up a little bit into that reporting season, and then from there it will come down to a few things in November. One's going to be the next November Fed meeting, and what people are feeling around that. But also in November, you're going to have the midterms, okay, in the US. So that also could affect a bit of sentiment. All right, so look, that's what's on the horizon, guys. Be wary coming into the end of this week. It could be a very volatile one. And then from there, I think we're lifting up into reporting, and that really sort of covers off the next 2 to 3 weeks of expectations at this point of time. All right, so thanks for listening in. I hope you got something from that. Now, take care, and I'll see you all next week. Bye for now.